Good afternoon. It is Friday afternoon, the 10th of February, 2023. This is Ron Brown. I'm going to do my weekend market report while the market's still open. There's about 35 minutes left in the market, and I just want to show you some of the ways I've been using HGSI and thinkorswim together. And I'll just go ahead and get started here. Once again, standard risk disclaimer: any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Now this is a grid I have set up in thinkorswim. If you look down here, I'll start here in the lower right hand corner. This is a 3-minute chart, this is a 16-minute chart, this is a 78-minute chart, this is a daily chart, this is a weekly chart, and this is a monthly chart. Now the reason I've set this up this way is that these are approximate. 5 of these 3-minute bars go into this bar here. There's 16 minutes here, which is closer to the 78-minute. In other words, 5 of these bars approximately will make up one of these bars. 5 of these bars approximately will make up one of these bars, and 5 of the 78-minute bars will make up a bar in the daily chart. 5 daily chart make up a weekly chart, and 5 of the weeklies, close enough, make up the monthly chart. But this way I get a long-term, and both a long-term and a short-term perspective on anything. And notice that I don't have any indicators on here other than VPA. Now this is the futures for the NASDAQ, or the NASDAQ 100. And here is where the trading day, well, here's overnight right here. And you can see what happened at 4 or 5 in the morning. It was down in this area, but it fell overnight, and then it rallied, and then when the market opened, it fell again, rallied, and so on. So you can see how volatile this is. Now, if you zoom in on this, or I should say if I zoom on this, or when I do zoom in, you can see how erratic the market has been today. Now, the 3-minute chart is pretty hard to follow sometimes, but it gives you the first indication when a market may be turning either up or down. So down here at the bottom, you can see there was a lot of selling, there was a lot of volume here, so it was a selling climax, and then it turned around and started moving higher on lighter volume, and then it started gaining momentum. Then traders jumped into this thinking it was going to make a big move, and what happened? It fell again. So these big volume spikes here on these two effort to rise were the high of the market today based upon the 3-minute chart. Now when I move to this chart over here, let's see, what's this? That's noon right here, and that right here in this area is noon. So these 5 bars right here went in to making this bar right here. Now if I go over here, and this is a 78-minute chart, noon would have been right here, and the 78 minutes, you can see that it went up and then it came back down, all within that time period between, well, right in here approximately makes up this part. So this is called fractal. These are called fractals because you can see that these charts build upon one another. This is a very useful technique to get a feel for market turns, especially for short-term trading. Now let's go up here. 5 of these bars right here make up this bar here. Now you can see there has been a lot of movement within the daily period, But if you just look at a daily bar, you really don't get a feel for that. So that's why it's important to use these intraday charts if you're an active trader and if you're looking to find good opportunities to get into a market. Now here's the weekly. The weekly doesn't look too bad because we've had this long run up here, and the monthly chart was actually, or it still is actually trending up, but now you can see there's the upper wick on the monthly chart, which is, let's see, what's the date on that? Well, this is February, so if I go to February over here, that's January 30th. So this monthly bar is the result of this weekly bar and the prior week, but this pullback right here gives us this upper wick. So like I said, these are called fractals, and they just build from the inside out. Now I'm going to bring this information up here, and let's just take a look here. This is the NYA advancers versus decliners, and you can see that even though the NASDAQ is down 0.82 today, the rest of the markets are doing really well. So the NASDAQ, and I'll go to the comp down here if I can find it. Here it is. It's down 89 points. And it's the weakest. Look at the daily chart here. You can see it's been going down, but now it's kind of finding a bottom. But if we compare that to what's going on with these other indexes, and these are all positive, just slightly positive, but just remember that the NASDAQ, which we concentrate on so much, is not the market. So I'm going to go back down here. I want to show you the advancers versus decliners, and this is for the NYSE. If you look up here, there's 101 more advancers than decliners, but if I go down to the NASDAQ, it's minus 698 right now, decliners over advancers. So where is the strength in the market? Well, I'm going to switch to HGSI for that information to get a good idea. And to do that, I'm going to go into my industries, and I'm going to select the tools. Now remember, I've got the quotes updating in the background here. I'm going to rebuild the indexes in group, and it's rebuilding all of the industry groups with the data coming from thinkorswim. So I'm going to click on through. Now I have to go up here to HGSI index analysis, sorted on raw combo, and the percentage price gain is 4.6% for the for the refining and marketing. Exploration and production is up 4.3, integrated oils and so on. And I believe this is a result of the Russians making a statement about they're going to cut off the oil supplies more to Europe because of the weapon supply. I didn't get the full story, but I think it has something to do with that. But you can see right here how easy it is to see where the strength is in the market. Now, I've got my quick pick right here, and let me close this. It's updating. Let's just go down to number 3. This is advancing issues versus declining issues. And it's 69-1 in the exploration and production. Midstream is 28-1. Refining and marketing is 18-1. Integrated is 14-1. So obviously the oils are where the strength of the market is. Now you could go top down here and look for these. You can change to the industry group, and you can go down to number 6. This is percentage price change up on these stocks within this index, and you can see it's sorted on that. So you can go through and check charts that way, or I'm going to show you something else you can do. You can go to back to the designer, And I've got some user smart groups in here. Going to go to tools, and I'm going to rebuild the user smart groups. Doesn't take very long. And let's see what that tells us. It's almost done. I've got a lot of user smart groups here. That's why it takes just a little while. Plus, recording slows it down. Okay, it's finished. So I'm going to open this up, go to my add-on groups. I'm going to go to 100 stocks and groups moving up and down. I'm going to go to those that are $15 and up. I'm going to click through to the warehouse view, and then I'm going into my daily prospecting scans. I'm going to go to 1A, and you can see that every one of these stocks are up. And what's represented in here? Well, if you suspected the energy stocks, you're right. Exploration and production, refining and marketing, oil and gas services, integrated oils. These are the industries. If I want to look at the major industries, you can see how oil, gas, and coal is dominating that. If I look at the sectors, energy is 39% of these stocks. Now, this list is limited to 100 stocks, and it's based upon stocks that are moving up based upon the percentage price change and the percentage range. Now, volume factors into this too, but the emphasis is on the percent price change and range. And if you look at this, you can see that these ranges are right up in the high 90s, most of them. Now what I'm going to do is I'm going to take this group here. I'm going to copy these symbols to the clipboard. I'm going to click down here on HGSI. I've got a group here called intraday up greater than 15. I'm going to import this. I'm going to paste these symbols from the clipboard and replace the current symbols. Click on this, and I'm sorted on the percent range. So it's really bouncing all over the place, but let's take a look here. It looks like D was on top temporarily. Here's an oil and gas right here, CPE. Let's look at it. Now, I'm going to maximize this. This is a 3-minute chart. This is intraday. So yesterday it was at 39.57. Intraday it got up here, and here's where it opened. It opened at 40.37, $1 higher. And you can see on the 3-minute chart that it bounced back and forth. Had pretty long base for a 3-minute chart, and then finally it broke out, or it started going up with the rest of the group. Now let's go in here, market watch, and I'm going to go to visualize. I'm going to go to personal. This one right here, it's the intraday up greater than $15. You can see where the strength is, and you can see that these are all up, and it's dominated by energy. If you hold your shift key and click on that, it goes, and then I can even go down lower. You just keep going if you want to, but let's go back here, and I need to make this a little bit larger. Get back up to the group, and it's all green, but I didn't run this with the energy or with this group early today, but I'm sure the way energy has moved up that many of these stocks were on the move, and this is something that should be done maybe 15 minutes after the market opens, so you can get a feel for it. Now here's another one. This is CVI. This is energy gapped up. You would have been able to see that all these energy stocks were gapping up together. Now this is really choppy here, but if we move over from the 3-minute to the 16, you can see 60-minute. You can see how this is intraday. This is when the market opens. It shot up, and then there was some quick profit taking, and then it started building, and At this point, let's see, where did it open? It opened at 32.91. It's up at 34.31 now, so a nice daily gain. And here is a 78-minute chart. Here's the open, 32.97. It looks like. Let's go back to this other one. Well, right in here, that area, and then it just started building throughout the day. So you can see how these fractals build on top of one another. It always starts from the inside out. By the inside out, I mean from the smallest time frame that you're using, and then it builds these charts. So these last, well, this one's still being built, but 1, 2, 3, 4, 5 approximately. This is actually a 16-minute chart, not a 15-minute, but anyway, approximately 5 of these bars is going into building this candle here. And 1, 2, 3, 4, 5, and now it ticked down a little bit so you can see the movement here, but here's a 78-minute chart. And it's a much smoother transition, of course, because you're not getting all that movement. But I just like the idea of being able to look at various time frames all in one glance. Now, what do we have? 6 minutes left. See what the NASDAQ, let's see what the comp's doing. I see Apple's up again barely, but okay. Here we go. This is the comp. This is the daily chart. You can see that it gapped down right and opened right here, and it's moving up. And if we look at the 3-minute chart, you can see what kind of a wild day it was. A lot of people thought the market was going to fall out of bed, and nobody can predict the market. I mean, we can look at charts from the prior day, prior week, and so on, and you can get a general feel for trends and so on. But predicting what's going to happen, forget it. If anybody says they can do that, they can't. So anyway, here's the 16-minute chart. It appears much smoother, but you can still see the volatility within the chart. And then if I look at the 78-minute chart, here's the open. It traded down, traded up, looked like it was going to make a nice move up, and then it failed and settled in this range. Now let's compare this to, let's do the S&P 500, see how it looked today. Well, it too has been pretty choppy, but it's positive, and that gives me a better feel about this market. It looked pretty bad at the beginning of the day. Let's go back to the comp. I don't have volume on this for the comp, but I mentioned in my report this morning, or my chart, that support had been broken, and it's still been broken. You can see this doji is forming. It's still been broken. It was broken at this point right here. Put that line right there. That's an approximate. Well, let me move it down a little bit. That's all right. That's close enough. But looking at this, I don't have volume, like I said, in here, but this was an exhaustion gap at this point, and the market tried to rally up. It was rejected. Here is a spinning top on, let's see, this would be Tuesday. It had a nice day. Wednesday, Thursday, Friday. Tuesday, it looked like it was just going to bounce off of this and hold the gap. Wednesday was a disappointment, I'm sorry. And then Thursday, it opened right here, and it just fell off and it broke support. And now it looks like it's trying to hold going into next week. But the trend now, it's gone from an uptrend. Here's a lower high, which was established when this lower low was put in. So the intermediate term trend, or I'm sorry, the daily trend is now down. And let's see here. I'm going to maximize the weekly trend. There's my trend line that I just put in. The weekly trend, it's formed a lower high, but it hasn't formed a lower low. It's going to have to take this low out. So I would say the weekly and the monthly trends are still intact on this market. It doesn't look like it's going to totally break down, but like I said, nobody can really predict what's happening or going to happen with the market. Let's look at AD line is still positive on the New York, still pretty negative on the NASDAQ. You can see it on all of these charts. That's it. I just want to show you how you can bring this information into the software thinkorswim from HGSI, and then you can do your analysis or trading from here. Let me do one more thing. I was going to quit. Let's take a look here at FANG. Look at that. That had a nice move up today, 143 to 149. If you're not into putting out a bunch of capital, there's the end of the market. I'm going to look and see. There's very little activity on FANG. I was going to see if there were any possibilities for spreads or anything, but I'm going to just leave it at that and go back to my charts. I'm going to go into HGSI is what I'm trying to say, and I'm going to go to an update. I'm going to deselect Metastock files. I use Amy Broker, so I update those. I'm going to update and include the intraday data. I'm going to start this, and I'll pause this while this is updating. Okay, so that's a complete update except for the fundamental data, which comes in overnight. Now what I have to do is go back to my update and deselect update and include intraday data, and I want Metastock data in the morning, so I'll apply that and I'll be set up for tomorrow. Now what this does is it updates everything, like I said, including the smart groups. So this end of day smart group now, this information, well, let me go to a different one that's dated. See, I don't have a date on these. Here's one. See, it says 210 now rather than 209. So before, I should have shown you that before I did this, but these are all updated with the current data, price and volume data from thinkorswim. But what I want to show you, and I'm not going to spend much time doing this, I'm going to go into my user groups, my market analysis user groups. I'm going to go to my broad market indices, and I just want to look at the broadest index. Well, it's not the broadest, but it's close to it because it's a S&P 500, 400, and 600. And then I'm going to go into my HGSI index charts, and I'll go down to 6A. And we didn't get a sell signal today. Let me zoom in on this one, because this is advancing issues versus declining issues, and it wasn't at least 3 to 1. If it were, I'd have one of these red rose-colored bars here, and the volume wasn't 3 to 1 either, or 1 to 3. But the force indexes both remain up, or I should say not but and. Force index 13 and 2, and the volume point of control remains up today, and you can see that it ended up with a green bar. So yes, we had a couple of days there where it didn't look good at all, and that was a little bit concerning, and it still could be. We don't know. Let's look over here. You can see the advancing issues were 1.35 to 1, 846 up, 625 down. I'm going to just drop into the 500, and you can see 1.73 to 1 up. So pretty positive day in the S&P 500. But this is just a good view to look at to see if there's any potential buys or sells based upon price and volume. I use this chart all the time. Let's look at one more chart, and then I'll end this. I'm just going to go up to the percentage of stocks above their 20-day, 30, 50, and 200-day moving average. You can see there's a lot of stocks still above their 200-day moving average. If I put this on here, alternate I, let's just go up to the top. The percent above the 20 is 52, above the 30, 61.4, above the 50, 64.8, and above the 200, 68. So, and that corresponds with where these lines are. So, yes, we've had a pullback, and there has been some loss of momentum, but you can see these two turn back up today, and this one has a slight upturn or is flat. Not worried, terribly worried about the market yet, but like I said earlier, you never know because nobody can predict that. Anyway, have a great weekend. I just want to take you through a few steps of how I use these programs together. Thanks for listening.